Welcome to Shorting Intro Part 3, Understanding Volume, Bagholders, T+2 settlement dates, margin calls, and force covering. It's just a single concept really, with a few caveats to it. So I would say I finally found the time to do this video, and GRTX was a great inspiration of a perfect bagholder chart, as well as PTPI, which is a perfect recent example overall. But really, I just want to delay the work on my coffee shop concept, Brew and You, and this seemed like a good way to waste a few days and pretend like I'm doing something else. So just a quick look at GRTX on the main chart. These are bagholders. We touched on this in the Sunday chat, that it's very rare that you're gonna fill the gap to the bagholders. Everyone's stuck at this high average, and they've been stuck for months. They really didn't see this coming. They held overnight for the drop, and all they want to do is get out. So any decent pop, much more likely in this chart, you're just gonna see selling off. So to explain a few concepts, and to recap, video 1 talks about research. Do your research, know the company that you're in. Video 2 covers some more technical aspects of supply and demand areas, resistance and support lines, and for example, how to draw these lines that I have on the chart. Start from the daily and go down the time frames to see what matters. But really, your focus should be on the high volume nodes and maybe large day range moves, and that's how you figure out where the selling happens, where the buying happens. My idea is the same. Trade like an institution, so you should only buy in strong demand areas. You should only short in strong supply areas. One look at PTPI on a daily chart, I want to buy around 2, maybe below 2, and it looks like I want to sell or anything over $4.38, anything over $4 basically, and I have my risk at the eventual risk is $5.15. Honestly, if that broke out and I was short, I would have to respect that risk and either cover partial or cover all. I say cover partial because a lot of times you will have spikes over the previous resistance just for the price to come back down. So it's like you'll know based on other factors if they're looking to issue money, if they're looking to raise. You might not be, if they actually have no news, the float, etc., etc. It's going to make you consider your stop outs or not. The way I use volume is where my niche is, and for the most part, my niche is let the first day go, collect the shorts, especially if it's low flow, and look for a liquidity trap where the shorts are all in there, but they don't have an exit. So thus, there's going to be another pop, and you short the next pop once the daily intraday trend is over. So PTPI is a good example, and that's why it's in focus. On November 23rd, we have 280 million in volume, and the guesstimated amount of shorts on shortvolume.com was, for me, this wasn't a trade. There was no short squeeze after that, and this was a nice fade, and granted, I think I missed it, but at the same time, there were other stocks that I was focused on, so it was okay for me to let this one go and avoid the headache of not knowing what the hell it's going to do. Since there was no second or third day squeeze, it just dumped off, so it just had a lot more back holders than we expected. 91 million, 25 million estimated shorts. I'm sure there's not 25 million shorts, but the way I use volume is I'll say, okay, 6 million the next day, 7 million the next day, we're at 13. We're still missing all the potential shorts. So to reduce my risk, I usually don't even start the short until everyone's squeezed out on an uptrending price that is higher than where the shorts entered. So I shorted this one, I put in 240 million, and I was short over my lines of 438, 458. I think my average was like 450 on this one. But the idea is, how I use volume is I look for trap shorts, make sure that they are potentially all out, so that when I'm shorting, there are no other shorts. and that means usually avoiding day ones because I don't have the volume information required if it's day one. Short. I actually want to see what the end result for the day is and what could happen based on statistics and what's happened in the past. On December, my most recent short on this was December 13th. Everyone should have gotten squeezed out on the 29th. You look at the volume, 280, 240, 91. Whoever was short there, whoever was short here, they got squeezed out. There's no more shorts left, so I shorted this. And I don't know, I covered super early. Low threes, I think 311, I don't remember the exact spot. When you had this pop on the 10th, this is almost my bread and butter in that I wouldn't short this because you don't have more volume than the previous spike. And what I want to see is more volume than the previous spike. 23rd, 91 million, 29, 240 million. And not necessarily more volume overall, but enough volume to cover the shorts. So this 240 million again had estimated short selling way over 51 million. So this wasn't enough volume for me. But what I did know is that if it spikes, we're going to have the same situation that we had on the 26th and 29, where the spike is going to squeeze out the most recent shorts. Of course, now the volume doesn't have to be 200 million shares. It only needs to be like 50 million where I start shorting based on this previous candle, not the candles before that. I don't have the entries because I took the picture the day after, but I shorted all these spikes above $4 and above. I was ready to short above 445, but I shorted this, I literally shorted this spike, and then the next day I covered under $3. I think this confidence mainly comes from understanding the volume. First day volume, who the hell knows? Shorts might be stuck, not touching it. Second pop volume, okay, but you know, it's shortable, but not the same size. Bigger volume on bigger price move, all the shorts are squeezed out while they're raising money. So understanding the research, perfect short opportunity on the 29th. Again, volume, short stuck, potential short, not really. Wait a day. Bigger volume, bigger price move, all the shorts are squeezed out. And yes, there's outliers. This couldn't keep moving. But so you have your respect, you have the lines you respect. My idea was short over everything over $4, 438, 458, using those supply lines. But 515, that would have been, that would be in the cutoff zone. I'm risking potentially up to, was it 90 cents to, make over $1. But then the probability of this thing going to $5 is a lot less than it going back down sub 3, based on the fact that they were issuing shares, and just based on the fact what the company does. It's not like a revolutionary mid cap or large cap with actual products that matter. So, quick recap of volume. I realized that it's not the most complicated thing to explain. It's just something that you have to pay attention to make sure that people get in and get out. Like ABCT, the downtrending chart is the absolute ideal. I shorted this thing over $3. So on a downtrending chart, again, day one, day two, yes please. That's, like, what's your edge? Day one is not really my edge. So if I short day one, I might get stuck. If I short day two, above 282 level, I'm thinking my lucky stars. Like, I can't believe this is butter. So let's focus, see what happens tomorrow. Definitely very interested in SPRB. If you look at the chart, this is the ideal chart for short. You just have Bagholders for days. They're stuck in it. The only slight caveat is Oppenheimer, $15 PT. They don't think it's worth $15. What they think is, if they can get it high enough, they can issue shares on it. and it could go higher. So first day, absolutely no touch. If the second day is higher on matching short volume and price correlation with it, then I'm interested in shorting it. If it fades, I'm expecting a liquidity trap, and maybe a week, 2 weeks later, I'm expecting a pop. So at the same time, I might go long on it if it fades for like 3 or 4 days, settles at like $3.30. Well, then we have a liquidity trap on our hands, and this thing could go higher, but maybe I'll go long and then short it when it's high. OCGN I'm interested in as well, but the reality of the situation is no matter how nonsensical the move is, 50 million shares are short on it. So it's like, because we know they're stuck in there from whatever previous days they were stuck in there, and the short float is accurate on this thing, I'm just going to treat it just like any other secondary mover, where I need 25 million shares exit with a price appreciation before I even think about entering a short position. Because before that, anything could happen. This thing could start ripping, and I would probably go long on this name. So there it is. All right. Thank you for coming to my TED. See you guys tomorrow in the Discord. Peace.